Canada has just executed what might well be the single most graceful, meticulously calculated, and profoundly impactful diplomatic pivot in the entire landscape of modern international trade history, pulling it off with nothing more than the sheer elegance and layered brilliance of one perfectly timed word that landed like a dancer's flawless spin. Picture this: Prime Minister Mark Carney stepping up to the podium in the heart of the Canadian Parliament, locking eyes with the cameras that were broadcasting every syllable live to the nerve centers of global finance, from Wall Street to London, Tokyo to Frankfurt, and distilling the full scope of Canada's bold new economic vision into a single term that functioned brilliantly on multiple levels at once. It was a literal ballet move, a coded diplomatic gesture, and a direct, knowing nod to one of the most legendary and symbolically charged moments ever etched into the annals of Canadian political lore. With unwavering confidence, he proclaimed that Canada was now in the midst of performing a pirouette, a deliberate, controlled turn away from its long-standing overdependence on American trade. This maneuver would hinge on one unyielding point of national strength: cleverly harnessing the very force and intensity of the pressures emanating from Washington to propel the rotation forward, completing the full circle with precision, and ultimately positioning Canada to land firmly, facing toward a wholly transformed array of economic opportunities, partnerships, and horizons that stretch far beyond the familiar southern border. The weight of that declaration hit the room like an electric current. Parliamentarians and observers alike caught the multifaceted meaning in a heartbeat. Financial markets, ever vigilant and quick to interpret signals, began digesting and pricing in the implications within mere minutes, sending ripples through trading floors worldwide. And over in the White House, former President Trump, glued to the coverage, processed it exactly as one confronts an unstoppable force, something utterly beyond his grasp to control or reverse, igniting a blaze of volcanic fury that erupted into no fewer than 14 social media posts crammed into just 3 hours, yet strikingly absent any real substantive policy riposte or counteraction. Smash that like button right this instant and hit subscribe to lock in your front row seat, because what Carney just unleashed with that solitary word isn't some fleeting headline. It's the most sweeping, unapologetic, and historically resonant proclamation of Canadian economic independence and self-reliance since the very founding of Confederation back in 1867. And the shockwaves from this moment are poised to fundamentally redraw the contours of North American trade, investment flows, and geopolitical alignments for at least a generation, if not longer. Let me break it down for you step by step, unpacking exactly why that one word packs such an extraordinary punch and carries layers of meaning that echo through decades of Canadian identity and strategy. Because without grasping the rich historical context that underpins it, you're missing at least half the depth and genius of what just unfolded in that parliamentary chamber. To truly appreciate the resonance, we have to rewind to Pierre Elliott Trudeau, who served as Canada's 15th Prime Minister and who, even today, stands as the most internationally acclaimed, intellectually formidable, and enduringly influential Canadian statesman to emerge across the breadth of the 20th century. Trudeau captured the essence of Canada's geopolitical predicament with a metaphor that has since become almost proverbial. He likened the nation's position alongside the United States to the precarious act of sleeping right next to an elephant. No matter how amiable or well-intentioned that massive beast might be in temperament, every subtle shift in its weight, every involuntary twitch of its trunk, every low grunt or heavy exhalation sends tremors that you feel inescapably in your bones, disrupting your peace and reminding you constantly of the imbalance. This image wasn't just colorful rhetoric. It vividly encapsulated the inherent challenges of asymmetry in power, economy, and influence that come with sharing a continent with a superpower. But Trudeau wasn't content to merely diagnose the vulnerability. He was a strategist at heart, and he crafted a thoughtful, proactive response to navigate and mitigate it over the long term. He dubbed his approach the third option, a deliberate policy framework aimed at intentionally broadening and diversifying Canada's web of international trade relationships and economic ties far beyond the overwhelming gravitational pull of the U.S. market. The goal was straightforward yet transformative. By cultivating alternative partnerships, Canada could steadily erode its dependency on any single dominant player, thereby expanding its diplomatic maneuverability, enhancing its bargaining power in negotiations, and creating buffers against external shocks or coercive pressures. When Trudeau put this philosophy into decisive action during the early 1970s, shifting Canada's diplomatic focus and economic outreach away from escalating American demands and toward deeper, more structured alliances with European nations, contemporary analysts, diplomats, and media commentators consistently invoked the same evocative imagery to describe the elegance and control of the move. They called it a pirouette, a ballet term denoting a tightly managed, aesthetically graceful rotation performed on one fixed point of balance, where the dancer relies on impeccable poise, timing, and technical mastery to execute a complete directional change while maintaining unbroken momentum and never once faltering or appearing off-kilter. Mark Carney's intentional revival of that very word in the present day is anything but a casual linguistic flourish or offhand reference. It's a masterstroke of political communication loaded with intent and precision. By echoing Trudeau's pirouette so directly, Carney is tapping into a venerable thread of Canadian political tradition that resonates deeply with the national psyche, signaling to voters and stakeholders alike that his current strategy isn't some radical invention born of desperation, but rather a continuation of proven, time-tested wisdom drawn from the country's own historical playbook. This invocation reassures the domestic audience that the pivot has solid philosophical underpinnings, draws on established precedents of successful leadership, and aligns with core principles of Canadian sovereignty that have guided the nation through previous eras of uncertainty. Simultaneously, it broadcasts a clear, confident message to the global community, investors, allies, and adversaries that Canada's reorientation away from U.S. dominance isn't a reactive spasm driven by short-term grievances or economic fear. It's a calculated, disciplined, and deeply rooted strategic evolution, executed with the same finesse that has defined Canadian diplomacy at its best. And here's the part that lands like a precision strike in the halls of power in Washington. It's a subtle yet unmistakable reminder that Canada has pulled off this kind of maneuver successfully before, emerging stronger and more autonomous on the other side. The pirouette isn't an uncharted experiment or a last-ditch Hail Mary in the face of crisis. It's a recurring motif in the Canadian narrative, a tried-and-true tactic that the country deploys when the moment demands bold, elegant repositioning. This historical echo underscores Canada's resilience and strategic depth, quietly asserting that while the elephant next door may grunt and shift, Canada has long mastered the art of dancing around it without getting trampled. With that foundation laid, let's transition to the tangible heart of the matter, where symbolic language meets ironclad policy execution. The pirouette Carney outlined isn't confined to eloquent speeches or historical allusions. It's a robust, multifaceted, and highly coordinated overhaul that permeates every critical layer of Canada's economic interplay with the United States, rolled out with a velocity and unity that betray 18 months of behind-the-scenes groundwork, scenario planning, and alliance building by a government that has been laser-focused on this inflection point since its inaugural days in power. Starting with the most frontline and observable shift, the comprehensive reorientation of Canada's trade flows and export destinations. At this moment, Canada channels approximately $550 billion worth of goods and services southward to the United States annually, a staggering sum that constitutes about 75% of the nation's entire export portfolio, making this the most intensely lopsided bilateral trade dynamic between any two advanced economies of similar scale anywhere on the globe. For generations, this heavy concentration was rationalized as an inevitable byproduct of shared geography, the world's longest land border facilitating seamless logistics, and the intricate web of cross-border supply chains that have intertwined industries like automotive, aerospace, and commodities over decades, creating efficiencies that seem too embedded to unwind. But Carney's pirouette boldly recasts this as a conscious policy choice, one that was defensible under the stable multilateral trade regimes of the past, but has grown increasingly precarious and limiting amid rising protectionism, supply chain vulnerabilities, and geopolitical tensions in the current era. The benchmark he unveiled, And this is the figure that sent audible gasps through the chamber and instant alerts buzzing on traders' phones, was an ambitious commitment to slash U.S. export dependency from 75% down to 50% of Canada's total outbound trade within a mere 5 years. That's a full 25 percentage point drop in half a decade, a pace that shatters any notion of cautious tweaking and instead signals a wholesale remaking of Canada's trade map, pursued with the urgency and resource mobilization typically reserved for national emergencies or wartime economies. To achieve this, export streams are being systematically rerouted toward a pre-built ecosystem of alternatives. The coalition of 50 nations aligned with the Davos Manifesto principles, the collaborative platforms within the BRICS Plus Energy Consortium, and a suite of bilateral trade pacts, investment corridors, and supply agreements that Canadian teams have painstakingly negotiated and activated with powerhouse economies like China, India, and the oil-rich Gulf states over those preparatory 18 months, ensuring diversified markets are ready to absorb the redirected volumes without disruption. Flowing naturally from trade redirection is the second pillar, a fundamental redesign of the financial architecture that undergirds these transactions. Carney made it crystal clear that, starting right now and without loopholes, every procurement contract the Canadian government signs with an overseas supplier will be priced and settled exclusively in Canadian dollars or the supplier's home currency, banning U.S. dollar denomination outright, with no exemptions for ongoing deals or transitional grace periods. This mandates that all future agreements funnel through newly established sovereign settlement platforms or customized bilateral currency swap protocols, deliberately sidestepping and rendering obsolete the long-dominant U.S.-centric clearing networks that have historically acted as gatekeepers for global finance. In lockstep, the Bank of Canada rolled out an expansion of its bilateral swap facilities to encompass every Davos Manifesto adherent, unlocking a massive $680 billion pool of non-dollar liquidity available at a moment's notice. This isn't an arbitrary number. It dwarfs the foreign exchange reserves of most G20 countries, intentionally calibrated to broadcast that Canada's push toward de-dollarization isn't pie-in-the-sky idealism. It's a battle-ready system, fully capitalized, tested, and primed for immediate deployment across public and private sectors. Building on this financial pivot, the third dimension zeroes in on energy, where the stakes are highest and the reversals most visceral. For the first time ever in Canadian governance, Carney enshrined a formal energy sovereignty directive as official policy, mandating proactive diversification of export markets to break the near-monopoly grip of U.S. buyers. The quantifiable objective: trim the American slice of Canadian energy exports, primarily heavy crude from the oil sands, natural gas, and refined products, from around 85% today to 60% over 7 years. A shift that will reshape global energy flows. To drive this, the freshly minted Canadian Energy Diversification Authority steps in as a dedicated powerhouse, tasked with forging multi-decade supply deals with hungry importers in Asia and Europe, syncing with the BRICS Plus Energy Task Force on equitable pricing models and non-dollar payment rails, and courting billions in sovereign wealth fund capital for Canadian pipelines, refineries, and extraction projects in exchange for locked-in access and favorable terms. The genius here, and the real sting for Washington, lies in the asymmetry it exposes. Over 30 years, U.S. Midwest refineries have been engineered specifically for Canadian heavy crude's unique properties, with billions invested in tailored infrastructure that can't pivot overnight without enormous costs and downtime. Thus, Canada's diversification doesn't just alleviate its own market vulnerability, it engineers a counter-dependence, where American facilities now rely on steady Canadian supply to stay competitive, flipping the leverage equation in ways that alter bargaining dynamics for years to come. And this is precisely where the unfolding drama veers into territory that's as wildly captivating as it is strategically telling, because Trump's immediate backlash to the pirouette was both utterly in character, raw, unfiltered, and explosive, and profoundly indicative of just how much traditional U.S. leverage has eroded in this arena. The posts cascaded in like a digital fusillade, 14 in under 3 hours, each one ratcheting up the rhetoric. Carney was smeared as a globalist turncoat selling out North American interests. Canada's pivot was framed as nothing short of economic aggression, a declaration of war on American workers and prosperity. Vows were made for retaliatory tariffs of unprecedented severity, designed to cripple Canadian industries. Emergency national security authorities were dangled as potential weapons, invoked in bombastic terms to underscore the supposed threat. Then, as abruptly as it began, the torrent halted, cut short, it seems, by the intervention of cooler heads in the West Wing who did what strategic advisors exist to do. They dissected the feasible responses, modeled the cascading fallout, and presented a sobering reality check. The verdict? The old playbook of dominance has run dry. Any viable countermeasures now risk self-inflicted wounds that match or surpass the harm to Canada, leaving Washington in a bind of its own making. Nowhere is this inversion more stark or politically charged than in the energy realm, where the calculations cut straight to the heart of American vulnerabilities. Consider the scenario. If Canada reallocates even a conservative 20% of its oil sands production toward eager Asian buyers via the expanded Trans Mountain Pipeline, the ripple effect hits U.S. Midwest refineries like a supply shock, driving up operational costs and, crucially, retail gasoline prices across a vast swath of the American interior. This isn't abstract economics. It's felt at the pump by everyday drivers, with the burden falling heaviest not on elite coastal enclaves, but on the working-class heartland states, Michigan, Ohio, Wisconsin, Minnesota, where voters grapple with higher fuel bills for commuting, heating, and farming. These are the very battlegrounds that swing national elections, the Rust Belt and Upper Midwest electorates whose turnout and preferences have tipped the scales in recent presidential contests. Escalating against Canada on energy, then, isn't just a trade spat. It's a self-sabotaging gamble that could spike pump prices in the precise demographics that decide who controls the White House, a political calculus that crumbles under scrutiny. The agricultural sector presents an equally binding mirror image of this dilemma, where mutual interdependence turns threats into boomerangs. Canada absorbs about $40 billion in American farm exports each year, everything from corn and soybeans to machinery and processed foods, making it an indispensable outlet for U.S. agribusiness. If the pirouette prompts a shift in Canadian sourcing toward more diversified suppliers under CPTPP accords or Davos-aligned networks, think premium Australian grains filling silos, Brazilian pork stocking freezers, New Zealand dairy lining shelves, American producers face the sudden closure of a prime market that's not easily replicable elsewhere due to logistics, tariffs, and global competition. This isn't lost on key players. The American Farm Bureau, with its deep roots in rural communities, tracks these risks meticulously. Senators from powerhouse ag states like Iowa, Kansas, and Nebraska lobby fiercely to protect them. And White House political strategists recognize that any action prompting Canada to curtail U.S. farm imports would gut the loyalty of the rural conservative voter base that's foundational to the Trump coalition's electoral viability, turning a foreign policy flex into domestic political suicide. Amid this high-stakes standoff, enter Warren Buffett, whose timely intervention added a layer of gravitas and market validation that's hard to overstate. His commentary dropped mere hours after Carney's address, channeled through Berkshire Hathaway's investor relations pipeline with the surgical timing and understated authority of a man who spent a lifetime surveying the global economic chessboard like a grandmaster anticipating dozens of moves ahead. Drawing on 60 years of immersion in markets, Buffett identified what he views as the ultimate harbinger of enduring value creation: decisive clarity. The rare gift of a leader who can pierce through complexity to see the terrain as it truly is, chart the optimal route with conviction, and steer through it unyieldingly, even as headwinds of short-term turbulence, stakeholder pushback, or adversarial pressure mount. Carney, Buffett affirmed, had exhibited this quality at a pinnacle not seen from any political figure in decades, blending vision with execution in a way that commands respect from boardrooms to trading pits. He then disclosed a telling fact. Berkshire's commitments to Canadian assets now form the company's heftiest international concentration outside the U.S., a vote of confidence backed by billions. And in the quote that's still reverberating through financial circles, Buffett framed the pirouette not as a rupture or withdrawal from the U.S.-Canada bond, but as its renegotiation, from a stance of empowered choice rather than compelled necessity. In his vast experience, he noted, no negotiation ever favored the side bereft of options over the one armed with them. It's staggering, almost surreal, to contemplate how we arrived at this juncture, but dissecting the chronology dispels any mystery. Washington's every tariff salvo inadvertently fortified Carney's domestic mandate, granting him the political cover to advance diversification steps that were already in the pipeline. Each blustery threat only hastened the very decoupling it aimed to thwart as Canadian industries and voters rallied around resilience. Every ratchet of escalation supplied fresh rationale for policies that might otherwise have drawn scrutiny or opposition, smoothing the path for bold reforms. In essence, the U.S. has played the unwitting role of lead choreographer in Canada's dance, with the opposing force it exerted providing the exact propulsion needed to whirl the pirouette to its triumphant close. The financial world's response was swift and unequivocal, a real-time referendum on the pivot's viability. The Canadian dollar vaulted 3.1% in a single session, its most explosive daily surge amid the entire saga, reflecting surging confidence in the loonie's prospects. The Toronto Stock Exchange shattered records, closing at unprecedented highs as investors piled into a nation suddenly radiating stability and growth potential. Broad-based gains swept Canadian sectors, energy giants buoyed by new market access, materials firms eyeing diversified demand, agricultural processors anticipating balanced trade, and financial institutions positioned to thrive in a multi-currency ecosystem. Conversely, the U.S. dollar index shed 2.1%, deepening its 18-month slide to thresholds that have the Federal Reserve on high alert for broader systemic ripples. American ag futures tumbled amid fears of lost export lanes. Auto parts suppliers with heavy Canadian ties saw valuations erode. Energy outfits banking on perpetual Canadian crude inflows faced harsh repricings. This wasn't ideological posturing, it was pure market logic. Canada emerging as a premium, reliable bet, America appearing comparatively erratic. Asset values realigned accordingly, validating the pirouette's economic wisdom. Yet the true magnitude extends far beyond bilateral borders. This is a paradigm-shifting proof of concept that reshapes global perceptions. Canada has irrefutably shown that a leading G7 nation, armed with astute governance and collective resolve, can demote entrenched U.S. economic reliance from an ironclad fate to a negotiable partnership in under 2 years. Washington's sway isn't etched in stone. It's a transient construct, vulnerable to evolution as trade norms, technologies, and alliances shift. Nations worldwide are now recalibrating, updating feasibility models, rethinking U.S.-centric strategies. Finance chiefs are rebalancing alignment equations, central bankers scrutinizing dollar dominance as risks. Leaders everywhere ponder, if Canada engineered this in 18 months, imagine our potential over 3 years, with preparation, unity, and vision. And so, this is the transformed landscape we now inhabit. Through one word infused with legacy, subtlety, and resolve, Carney channeled Canadian heritage while charting a sovereign future. The pirouette delivers, halving U.S. export dominance to 50% in 5 years, erecting $680 billion-backed non-dollar frameworks, and institutionalizing energy shifts that invert leverage on America's electoral Achilles heel. Trump's 14-post tirade yielded 0 decrees, no viable counters free of steeper American backlash. Buffett deemed it epical clarity, elevating Canada in Berkshire's global portfolio. Markets etched the verdict. Canadian dollar up 3.1%, Toronto at peaks, U.S. dollar down 2.1%, all in one day. The old leverage lies depleted. Fresh pathways stand fortified. The pirouette concludes Canada alighting with grace, equilibrium, and a gaze fixed on uncharted vistas, as foretold. If this deep dive illuminated the epical gravity of Canada's historic pivot and its ripple across our interconnected world, prompting you to question entrenched powers and envision bolder horizons, smash like. Share your insights on Washington's inevitable, perhaps desperate countermove below, and subscribe today. This saga's unwritten chapters promise twists that could redefine global order, and you'll want every update as they break.